When a trader sits down to face the market, he often believes his task is to predict or outsmart it. That's his first illusion. The market is never personal. It's neutral, an endless stream of opportunities reflecting nothing more than behavior and probabilities. The moment you think the market is something to conquer, you've already made it about yourself, and that's where most traders begin to lose. The market doesn't care what you feel, hope, or fear. It's not right or wrong, it just is. The trader who believes his emotions can somehow bend probabilities is trapped in a dangerous illusion. Tell me, have you ever felt that surge of resistance when a trade goes against you and you hold on, not because the market says you should, but because you don't want to be wrong? That's not analysis, that's ego. That's emotional attachment, pretending to be logic, and it's fatal in this game. The only way to last is to detach, to approach each trade as just another moment in an infinite sequence of probabilities, rules, and structure. Those are your anchors in a sea of uncertainty. And yet every trader starts out thinking he'll be the exception. He believes he can rely on his intuition or gut feel. But intuition without mental discipline is just impulse. How many traders have been destroyed because they couldn't trust their own plan? More than you could count. When I began observing the markets, I noticed that price movement wasn't random. It reflected patterns of collective human behavior. But recognizing patterns and executing on them consistently are two different things. The challenge isn't in seeing opportunities. It's in managing yourself so your emotions don't sabotage execution. How many times have you seen a clear setup, a strong signal, and yet hesitated because something in you didn't feel right? That's the psychological battlefield. Belief versus impulse, rules versus emotion. The mind will always seek comfort, but trading rewards discomfort, the willingness to follow structure when every fiber of you wants to do something else. Rules don't thrill the ego. They feel mechanical, lifeless. But trading isn't about excitement. It's about consistency. It's about operating like a professional in an environment where amateurs seek stimulation. Think about it. Every emotional trade you've ever made, doubling down to win back losses, chasing to feel alive, wasn't driven by market logic, but by psychological pain. The chart is the trader's mirror. Price and volume reflect crowd behavior, but they also expose your own internal state. The question is, can you read it objectively, or are you blinded by your need to be right? Most traders aren't analyzing the market. They're projecting their beliefs onto it. They fall in love with trades, defend them, nurture them, even when the market has clearly invalidated their idea. I never married a trade. Each position is just one of countless opportunities, one more expression of probability. Discipline, while uncomfortable, gives you freedom. It costs you the illusion of control, but it buys you emotional stability. What's one big win worth if the next loss wipes you out? I've seen traders make fortunes and lose them all because they confused outcome with process. They didn't lose their ability. They lost their mental balance. They let emotion re-enter the system, and the market, in its perfect neutrality, reflected that back to them in loss. The irony is that trading principles are simple. Define your risk. Cut your losses. Let winners run. Never add to a losing position. Follow the market structure, not your internal noise. These aren't secrets, they're laws. They exist because every trader before you has paid for them through psychological pain. So why do traders still break them? Because they crave certainty in a world where certainty doesn't exist. Rules demand acceptance of uncertainty, but the ego demands control. That's the paradox. Have you ever watched a market drift sideways and felt that growing itch to trade just to escape the discomfort of waiting? That's not strategy. It's the mind rejecting stillness. In my own path, every time I lost, I could trace it back to one thing. I tried to control what couldn't be controlled. The market didn't hurt me. I hurt myself through attachment, impatience, and the illusion that I could impose my will. The real lesson? The market reflects you, your strengths, your weaknesses, your fears. The enemy isn't external, it's internal. Most traders come seeking excitement, not consistency. They won't admit it, but they crave the emotional rush, the feeling of risk, the surge of winning, the illusion of mastery. But the traders who endure, who grow their accounts year after year, they've trained their minds to be calm amid chaos. They understand that trading is a mirror for belief systems. Excitement belongs to gamblers. Consistency belongs to professionals. The market is pure crowd psychology. Fear and greed printed as price. The crowd buys at emotional peaks and sells at despairing lows. If you operate from emotion, you are the crowd. But if you follow your process, you step outside the collective illusion. You become the observer, not the participant. When everyone's euphoric, your rules remind you that risk is rising. When panic sets in, your rules remind you that opportunity emerges. Without rules, you're not a trader. You're a participant in the mass emotional experiment. Do you want to be part of the herd or the one who sees through it? The hardest trades are usually the ones most aligned with objectivity, buying when fear dominates, selling when greed peaks. But that's impossible. If you define success by how you feel, emotional traders can't see opportunity because they're trapped inside the crowd's narrative. To follow rules when everyone else acts on impulse feels lonely, but that loneliness is the mark of independence. The market doesn't care who you are. It has no memory, no agenda. It simply reflects action and reaction. The only thing you control is your response. Most traders can't even control that. They can't master their fear, their need to be right, their urge for excitement. That's why they fail. Not because of lack of skill, but lack of psychological discipline. Your rules are the framework that keep you aligned with the truth of probability. Break them, and you fall back into the illusion of control. How many times have you promised yourself you'd respect your stop, only to move it because you couldn't handle the pain of being wrong? That's not the market punishing you. It's your refusal to accept uncertainty. Every broken rule is a declaration of ego over truth. And ego always pays dearly. One day, no matter how confident you feel, the market will humble you. That's not punishment. It's balance. The only shield is humility. And humility begins when you accept that you don't know what will happen next. Rules aren't constraints. They're expressions of respect for uncertainty. They remind you that your judgment is fallible, that emotions are deceptive, and that your job isn't to predict, but to align. Haven't your strongest hunches often led to your biggest losses? I used to write my trading principles daily, not because I didn't know them, but because self-awareness fades when the market starts moving. Writing anchored me. It made my beliefs tangible, reminded me that my job isn't to fight the market, but to stay psychologically consistent. Have you written yours? Or do you keep them vague, flexible, convenient to break when emotion spikes? Trading isn't about action. It's about waiting for alignment, waiting for probabilities to converge, for belief and opportunity to meet. And in that waiting, the mind gets restless. It whispers, "You're missing out. You need to act." But that's the illusion. Patience is not inaction, it's mastery. I never blamed the market for my losses. That's what untrained minds do. They externalize what they refuse to face internally. But every loss is feedback, a message about your beliefs and discipline. The only question is whether you'll learn from it. The market is the ultimate psychological mirror. It gives you exactly what your mindset deserves. Break your process and you'll pay tuition to the market school. Follow your process and you'll survive long enough to evolve. Isn't that the goal? To stay in the game with clarity and control? Emotions seduce you into gambling. Structure keeps you grounded in probability. That's the truth of trading. Few want to hear it because it strips away the fantasy. People come to the market seeking excitement, not mastery. They want to feel something. But feeling isn't trading. It's addiction. And addiction destroys. That pulse of thrill when you hit the buy or sell button, that's not awareness. That's the emotional self hijacking your discipline. The market doesn't care about your excitement, your hopes, or your pain. It's indifferent. It simply reflects energy and choice. And once you understand that, you'll stop fighting it and start aligning with it. Because trading's never about conquering the market. It's about conquering yourself. Haven't you noticed how the trades you take on impulse always seem to convince you that you're more skilled than you are? While the impulsive losses remind you of how little control you truly have. Rules have no glamour because they don't appeal to the emotional self that seeks validation. They are dry, mechanical, methodical, and yet they are the very essence of consistency. Rules don't flatter your intelligence, they ground it. They don't feed your pride, they protect your capital. And isn't that their purpose? To keep you aligned long enough for genuine probabilities to work in your favor? Yet most traders abandon them the moment emotion whispers, "This time is different." That's not the voice of a professional. That's the voice of the gambler's mind. The part of you that can't tolerate uncertainty and craves control. I remember in my early years watching the price move tick by tick, convinced I could anticipate what would happen next. I'd see a setup forming, but impatience would whisper, "Why wait? Jump now." That voice always came from fear of missing out, fear of being late, and I confused it with intuition. Sometimes it worked, which was the worst thing that could happen. It rewarded undisciplined behavior and taught me the wrong lesson. Each time it didn't work, I paid twice, once in money and once in confidence. It took years to understand that the ability to wait for confirmation, to let the market prove my setup valid, was far more valuable than the thrill of acting early. Haven't you felt that same inner pressure to move before your plan gives the green light? That's the psychological divide between the gambler and the trader. The gambler acts to relieve emotion. The trader acts to express an edge. A gambler hopes. A trader knows. That is the difference. A gambler clings to losing trades because he needs to be right. The trader accepts being wrong instantly because he knows each loss is just one event in a series of probabilities. Rules don't plead, they direct. They say, exit. And if you obey, you remain in control. Disobey, and you hand control to the market. Think of the times you've held on to a loser because you couldn't bear to admit error. Did the market ever care? It moved as it always does, indifferent. I've seen countless traders equate holding with strength when in truth, it was avoidance disguised as courage. Real courage in trading is the ability to act in alignment with your rules despite emotional discomfort. It's the courage to cut when it hurts, to wait when it's dull, and to act decisively when your edge appears. That courage doesn't feel good. It feels unnatural. But that's the kind that lasts. The gambler's courage evaporates when pressure rises. The trader's courage, built on belief in structure, endures. Which kind do you bring to the screen? Every flicker of price whispers temptation. Maybe this is the one. Maybe I can outthink it. The gambler listens, the trader silences the noise. Rules are the filters that separate signal from psychological distortion. Without them, you'll crash into the same emotional reefs again and again. And yet the irony. The moment traders taste a little success, they credit instinct over process. They forget the discipline that produced their wins. How many times have you promised to respect your stops, only to move them when hope returned? Trading isn't about being right. It's about being consistent. You can be wrong often and still win if your losses are controlled and your winners expand. But you can be right frequently and still lose if you let emotion interfere with the math. Rules convert chaos into structure. They shift focus from outcome to execution. Without them, you're not trading probabilities. You're gambling on emotion. And emotion has no edge. Do you want to build a future on chance or on consistency? The gambler feeds on luck. The trader feeds on process. The gambler seeks excitement. The trader seeks peace of mind. Every trader must wrestle with that inner gambler, the part that fears missing out, the part that wants to feel alive through risk. That part never dies. It waits in moments of weakness or overconfidence. When discipline slips, it whispers, "Just this once." If you listen, you've already lost. Haven't you heard that voice after a losing streak? Or when you've been on a hot run? That's not intuition. That's emotional memory trying to reclaim control. Capital is energy, the lifeblood of opportunity. The gambler wastes it. The trader preserves it. The gambler treats each trade as a chance to prove something. The trader treats it as one more expression of probability. Which mindset do you choose when the battle begins? Emotion makes gambling feel easy. It demands no discipline, no patience, no structure, just reaction. But trading, real trading, is deliberate. It's structured. Rules are the cost of professionalism. They demand focus, restraint, and acceptance. They ask you to endure boredom, to embrace discomfort, to surrender control. The gambler rushes, the trader breathes. The gambler seeks action, the trader seeks alignment. Which one do you think lasts? I've watched traders scoff at rules, calling them restrictions. But rules aren't chains, they are anchors, stabilizing forces in a sea of randomness. Without them, you are adrift in emotion. With them, you command your response. Do you want to be tossed by every wave of fear and greed? Or do you want to navigate with calm precision? Every day, the choice is yours, to gamble on feelings or to trade by probabilities. One path destroys, the other sustains. But survival isn't thrilling. It's steady, patient, and often uneventful. Yet only through survival can compounding occur. Emotion seduces you into gambling. Structure keeps you in business. Every broken rule is a psychological confession, a moment where emotion triumphed over discipline. When you break a rule, you're not just risking money. You're declaring that your need to be right outweighs your commitment to consistency. That's the ego talking. Pride in trading isn't harmless. It's toxic. It whispers, "You can bend the rules. You've earned it." Haven't you ever moved a stop just to avoid being wrong, convincing yourself the market would turn? I have. And every time, the price of pride was higher than I expected. Sometimes small, sometimes devastating, but always costly. The market punishes arrogance not out of malice, but because it must. It mirrors your state of mind back at you. And the punishment rarely comes instantly. It comes delayed, just long enough for you to believe you got away with it, until you don't. Rules aren't arbitrary. They are born from collective experience. Cut losses. Never add to losers. Trade in alignment with trend. Let winners breathe. These aren't cliches. They are distilled truths paid for in pain. Break them, and you're not just defying yourself. You're denying the accumulated wisdom of every trader who came before you. When you say, "This time is different," you're really saying, "I'm immune to reality." That's pride. And the market has a way of dismantling pride with surgical precision. Pride is cunning. It doesn't announce itself. It disguises itself as confidence. After a few good trades, it tells you that you've evolved beyond the basics, that you can rely on instinct now. But that's when danger strikes. Success in trading is fragile. A few wins can inflate ego faster than years of learning can humble it. Pride grows on comfort. Discipline grows on discomfort. Pride convinces you to break a rule just once, then twice, until your system becomes suggestion, and your suggestion becomes chaos. Haven't you noticed how one small rationalization, a moved stop, an early entry, easily becomes habit? That's how discipline erodes silently. Every time you break a rule, you reinforce emotional thinking and weaken structure. And once rules feel optional, you're no longer a trader. You're a hopeful participant in randomness. The market doesn't reward cleverness. It rewards consistency. I've seen talented traders lose everything, not for a lack of skill, but because they thought they were above their own process. That's pride's real mask, the belief that rules are for others. The moment you think you've outgrown discipline, the market reminds you who's in charge. Haven't you felt that humbling sting right when you believed you'd mastered it? Every broken rule is an act of ego. The moment you value being right over being profitable. Pride seduces, humility preserves. Rules exist because human nature is emotional. They exist to protect you from the parts of yourself that want to self-destruct. When you follow them, you're not showing weakness. You're practicing mastery. When you break them, you're pretending strength you don't possess. Pride will always disguise weakness as power. The real power is in surrender, the willingness to let rules, not emotions, decide. Pride tells you that breaking rules proves control, but the truth is that it exposes a lack of it. Every trader faces that voice after a win or a loss. It always says the same thing. You know better. Forget the rules. You know better. That's the voice of ego, not intuition. And the moment you listen, you've already stepped off the path of consistency. The market will always collect its payment for that. Isn't it strange how pride always sounds logical in the moment, how it disguises itself as rational thinking, and only later do you see the deception? The true danger of pride isn't the money lost, it's the integrity of your discipline, eroding one exception at a time. Once pride convinces you to break one rule, the psychological foundation holding all your rules together weakens. Today it's moving a stop. Tomorrow it's over-leveraging. Next week it's abandoning your risk limits entirely. Each small breach compounds until you're left fully exposed, your process gone, your edge meaningless, and your emotions steering the ship. Pride is a terrible shield in a world ruled by probabilities. Have you noticed how easily discipline unravels once you justify just one deviation? That's why every broken rule matters, not for the dollars lost, but for the mindset compromised. Each time you override your plan, you're unconsciously affirming, "I know more than the market." But that statement is never true. The market doesn't fight you, it reflects you. It waits patiently until your inconsistency aligns with risk, and then it delivers the lesson you refuse to learn. And by the time that lesson arrives, the cost, psychological and financial, is always heavier than if you'd respected your structure from the start. Isn't it always the rules we think we've outgrown that humble us the most? Patience in trading isn't passive. It's psychological endurance. The market tests your ability to wait long before it tests your courage to act. Anyone who has stared at the screen while nothing happens knows how the mind starts inventing reasons to act. Pulling the trigger is easy. Waiting demands 100 acts of restraint. And restraint, repeated over days, weeks, and months, is what separates a disciplined trader from an impulsive one. Haven't you felt that restlessness during quiet markets, that internal push whispering, "I have to do something"? That's the emotional self rejecting uncertainty. But the market doesn't reward impatience. You can't force signals to appear, and you can't demand opportunity because you're bored. Most traders confuse activity with progress. They believe trading more means improving faster. But overtrading is the slowest, most consistent path to depletion, financial and emotional. The trader who waits for valid setups preserves energy and capital, while the one who trades out of restlessness bleeds out one cut at a time. Ask yourself, when you enter, is it because the market presented alignment, or because you couldn't handle the stillness? Patience is the truest measure of mastery. You could have the most robust system on paper, but without the ability to wait for confirmation, it's worthless. A rule that says enter only on breakout is meaningless if you jump early out of anticipation. And isn't that always how it happens? The impatience to act replaces the discipline to wait, and when the real signal comes, you're already trapped, unable to participate. I remember long stretches when I barely traded. The charts drifted aimlessly, setups were weak, conditions uncertain. My rules said stay flat, and staying flat was harder than any loss or any win. The market moved daily, tempting action, testing belief. You watch others take trades, hear their success, and doubt your restraint. But the professional knows that sitting out is also trading. It's protecting capital until alignment appears. Have you felt that sting of watching others act while you wait, questioning whether patience is wisdom or fear? It's neither. It's control. The market is a battlefield, and capital is ammunition. If you fire at every flicker, you'll be empty when the real opportunity arrives. Impatience wastes ammunition on noise. Patience conserves it for clarity. Haven't you entered weak setups just to relieve the pressure of waiting, only to regret it when the true move came later? That's the cost of emotional activity. Most traders mistake motion for progress, but waiting is action. It's internal action. It's the invisible discipline of holding still when every impulse screams, do something. A single execution lasts seconds, but disciplined waiting is a continuous act of control. That's why it feels so hard, because it stretches your perception of time. The longer you wait, the louder emotion becomes. The voice of fear says, you'll miss it. The voice of greed says, you need to act. The crowd listens to both, chasing every wiggle, mistaking noise for opportunity. But professionals know that true profits come from rare, high-probability alignments, the few moments when conditions converge perfectly. You can't create those moments. You can only recognize them when they appear. The question is, are you patient enough to wait? The crowd rushes, always fearing they'll miss out, always paying to learn the same lesson again. I've seen years where my biggest gains came from a single trade. But that trade only appeared after months of stillness. Others mocked my inactivity, said I'd lost my touch. But when my setup came, I acted with full conviction. That one move outweighed dozens of random trades they'd taken chasing motion. That's the paradox. One disciplined act at the right moment outweighs 100 impulsive ones taken for stimulation. Patience isn't weakness. It's focused control. It's the ability to let your rules, not your impulses, dictate action. Every tick, every fluctuation, every flicker of volatility is an invitation to abandon structure. But patience says not yet. It's the inner filter that keeps your execution aligned with probability instead of emotion. Without patience, you trade constantly but rarely with clarity. With patience, you trade rarely but always with purpose. Which do you think the market rewards? Constant reaction or selective precision? A trader who cannot wait for validation isn't applying an edge. He's rolling dice. Charts and numbers don't make him a trader. Mindset does. Without psychological control, he's gambling with structure as a disguise. The market is merciless toward such behavior because it punishes emotional energy, not technical error. But the patient trader knows each setup is a key. And without the key, there's no entry. Haven't you ever tried to force a door open only to have it slam in your face? It's ironic. Traders think pulling the trigger is the brave part. But true bravery lies in the waiting, in holding composure while everyone else chases shadows. Waiting when your nerves burn, when boredom tempts you, when you doubt your edge. That's real strength. Because once patience has done its work, action becomes effortless. Impatience creates noise. Patience creates opportunity. Impatience brings endless small losses. Patience yields rare, meaningful wins. The difference isn't in strategy, it's in self-control. So ask yourself, can you trust yourself to wait when the market is silent? Many say patience is dull. They crave stimulation. They want the rush, the chase, the drama. But excitement isn't trading. It's distraction. Real trading lives in stillness. It's waiting in silence so that when the signal finally comes, you act with clarity and confidence. If boredom breaks you, the market will too. But if boredom strengthens your focus, you'll endure. And in that endurance lies the trader's real edge.